Today, we share nothing but good news. Let's start at a 10,000 foot level. Goldman Sachs shared their economic outlook last week. The headline read, Goldman Sachs predicts global economic break in clouds for 2020. U.S. housing market reinvigorated. Goldman believes the economy will expand 2.3% in 2020 and 2.4% in 2021. They go on to say, we are reasonably confident that U.S. growth is improving for three reasons. First, the sharp drop in mortgage rates have reinvigorated the housing recovery. The structural outlook for housing is also strong as level of building activity remains well below demand. We have another source that supports their last point about building, but let's wrap up with Goldman's before we go there. They go on to say another economic boost will come from a de-escalation in trade tensions between US and China. The world's two largest economies are working on phase one of a preliminary deal to end the trade war. That's good news for everyone. They wrap up by saying the global outlook for inflation, closely watched by the bond investors who influence mortgage rates, will remain tame, according to the forecast. That's also good news, as inflation is the enemy of low mortgage rates. If inflation stays in check, rates should stay relatively low as well. Speaking of low rates, almost everyone thought rates would increase this year, and we all know they did not. They actually decreased. Here's another interesting graph that puts things into perspective. I know we're all sick of hearing record low rates, but they really are. This is a graph you can share on social that shows that rates are really at record lows for almost 50 years. They dropped after the Great Recession and haven't really increased too much since then. Here's another one. This graph shows how strong US existing home sales have been. The dotted line represents year-to-date total, so you can see we are basically on pace with other previously strong years in housing. And most projections that I read say this will continue into 2020. Interesting point from this graph, housing has really remained strong for a long time, only slowing down during the Great Recession. Share this good news on social for anyone that has housing concerns, or just share the entire show, cause it's all good news. Let's wrap this up with the cherry on top. Here's another story from last week titled, U.S. housing market experiences largest inventory decline since 2018. Now, this is from a Remax housing report. They opened by saying in October, the number of home sales grew 3.9% from the previous year. They continue by saying, although sales increased last month, the nation's housing inventory posted a steep decline. Housing inventory fell 9% year over year across 54 housing markets, representing the largest retreat since May of 2018. They also make mention of home prices continuing to rise, which is awesome. Now, inventory declining is good and bad. We may have a supply shortage, but that means demand is strong and will remain strong going into 2020. Remember how we opened the show with the Goldman Sachs point about building activity to remain strong? Well, this is why. If we don't have enough houses, that means that we need to build more, which means demand is strong, and housing holds its value and probably continues to rise, and that typically points to a healthy building economy with strong jobs. So, as I said earlier, this is all good news. Hey, realtors and lenders, share this on social. Then once you've shared it, grab a client and a referral partner, head to happy hour, cheers this good news, and celebrate what's coming your way. Just make sure you share this first. See you guys next week.
I'm the one early morning in the dawn.